हॅलो, आम आय ऑडिबल शेला? आवाज येतोय
येस मॅम.
क्लिअरली?
हो हो येतो मॅम आवाज.
हां, आता 1 मिनिट स्ट्रीमिंग चालू आहे का मला चेक करू देत. हां, स्ट्रीमिंग इज स्टार्टेड नाउ. Like next topic we have started, so we will make another video. So we discussed till, you recall we discussed till quantitative measures. Now we will be open market operations we discussed, variation of reserve ratio we discussed, right?
Yes ma'am.
Now we will see what is qualitative measures.
Credit control.
Qualitative measures means what? Like previously we saw open market operations and variation reserve are quantitative measures. Qualitative measures is we will take into some qualitative actions which will help in reducing or increasing the credit in the economy. Okay? So what are these? A central bank also possesses certain techniques by which it can control the direction and distribution of credit purpose wise or area wise. So qualitative measures will be taken with a specific purpose. Like the purpose might be different. There might be different purposes. So with a specific purpose, qualitative measures will be taken into consideration. The purpose of selective control is the rational allocation of scarce bank credit and its economic utilization. Further, sectorial development of credit and controlling in other directions serve the purpose of preventing speculative activities with the help of bank finance and favoring productive activities. These techniques are very helpful in less developed economy where overall credit restriction can hinder growth by preventing the flow of credit investment. Moral suasion is a qualitative measures. What are qualitative measures we discussed, Shaila? Qualitative measures are the measures taken with a specific purpose. So what can be these specific purposes? To give loan to to less developed small sector or medium sector enterprises and not to give much loan to large enterprises. What will this help? Help in growing the small and medium sector enterprises, right Sheila?
Yes ma'am.
So the purpose will be to grow small and medium sector enterprises. So Reserve Bank will provide these directions to the commercial banks, like prioritize giving loan to small and medium sector enterprises and don't give much part of loan to the large organizations. So according to the directions of the central bank or the Reserve Bank of India, the commercial banks will operate, right? They will follow the policy. They will provide loan to small and medium sector enterprises and refrain from providing much loan to large organizations. The purpose will be what? Small and medium sector enterprises will grow, right?
Yes ma'am.
Now clear, Kunal and Sheila?
Yes ma'am.
See, that is the purpose here. The purpose of selective control is the rational allocation of scarce bank credit and its economic utilization. Further, sectorial development of credit and controlling in other directions serve the purpose of preventing speculative activities with the help of bank finance and favoring productive activities. These techniques are very helpful in less developed economy where overall credit restriction can hinder growth by preventing the flow of credit for investment. Moral suasion is such a qualitative measure. What we discussed, the same thing. Central bank will provide directions to the commercial banks stating provide loan to a particular sector and avoid or don't provide loan to a particular sector. With the purpose, if they provide loan to that particular sector, commercial banks provide loan to that particular sector will grow in the economy. Moral suasion is a qualitative technique. The central bank requests banks to lend more or not to lend to some sectors. Clear? Clear, Sheila? It will direct the commercial banks Central bank or the reserve bank that give more loan to a particular sector and don't give loan to a particular sector. What will happen when more loan is given to that particular sector will grow in the economy and it will lead to development of that sector, right?
Yes, ma'am.
There is no legal compulsion behind their acceptance. Generally, if the request is not carried out by the member bank, the guardian of the banking system may take such steps as banks are forced to accept. Mostly what it is, commercial banks have to accept the directions provided by the Reserve Bank of India. Otherwise, they cannot operate. They have to follow what the Reserve Bank tells them. The central bank is often empowered to issue directives to member banks. What are the member banks? Member banks are the commercial banks. Central bank or the Reserve Bank of India will provide direction to the member banks, that is the commercial banks. Such direct orders are in the form of directional control, prohibiting loans of particular type of giving advice to grant loan to priority sectors. If the central bank thinks that a particular sector should grow in the economy, it will use moralization and it will ask the commercial banks, give directions to the commercial banks that give more and more loan to this particular sector, and what will happen? That particular sector will get more capital, it will grow in the economy. Meaning of money market. So, money market and capital market. See, money market is a market in which it is a short-term credit market, while capital market is a long-term credit market. What does short-term and long-term credit mean here? See, money market means what? Issue of treasury bills. Treasury bills is a short-term duration instrument which is issued. Government securities, they are also short-term. Commercial bills, they are also short term. But capital market means what? Giving long term loans or other things which relate to the long term relating to that particular duration which is long term, that will relate to capital markets. In capital markets we have various types. See, stocks, bonds, then we have debentures, then we have derivatives, forwards, futures, swaps, fixed income products. So these are all capital markets. Short-term market is a money market where we have government securities, commercial bills, treasury bills. Okay. So we will see what is money market. Money market is the nerve center of 132. Money market. I don't know. Check on the front page now. Index page, you go on the index of the book and check what is the page number for money market and then go there. Even the page does not match. Index वर जा ना बुकच्या आणि मनी मार्केट बघ कुठल्या पेज नंबर वर आहे?
141.
141. हां. इंडेक्स वर जायचं. Money market is the nerve center of the financial system. A well-organized money market is the basis for an effective monetary policy. What money market does? Same, right? People earn money. They save certain money. They save that money. So, money market helps that savings of people to be channelized in investments, right? Those investments will be short-term investments, right? Capital market is a long-term investment. But money market, that savings of the people will be mobilized to channelize in a short-term investment in the economy. Money market mobilizes savings from different sources and makes them available for investment. It is a mechanism through which funds flow from surplus units to deficit units in the economy. Meaning of money market. Financial markets are functionally classified into money market and capital markets. What we saw, short-term investments are in the money market, which are treasury bills, commercial bills, government securities. But long-term investments will relate to capital market. Kunal, is it clear? Okay. Next, this classification is on the basis of term of credit. That is, whether the credit is supplied for a short period or long period. Money market refers to institutional arrangements which deal in short-term funds. This all right? Short-term funds is money market and long-term funds relate to capital market. Capital market, on the other hand, deals in long-term funds. Money market is a short-term credit market which deals with relatively liquid. Short-term means what? It is the assets are more liquid and quickly marketable assets. You can immediately go and sell that asset. That is a liquid asset. Clear? Such as short-term government securities, treasury bills, bills of exchange, etc. Now we will see the definition. According to Crowther, the money market is a collective name given to the various firms and institutions that deal with various grades of near money. The Reserve Bank of India defines money market as the center for dealing mainly for short-term character in monetary assets. It meets the short-term requirements of borrowers and provide liquidity of cash to the lenders. Money market helps in providing short-term requirements of the money because it is a short-term market and it is a very liquid market. Liquidity is huge in money market. What will be the objectives of money market? A well-developed money market serves the following objectives. Provides an equilibrium mechanism for ironing out short-term surplus and deficits, right? With the help of money market, people can invest their funds or savings in a short duration, right? Like see, if I am a person, I have some money which is available as savings and I want to invest it for a short duration, then money market provides the various instruments through which I can invest my money in a short-term duration investment, right Shaila? Provides a focal point for the intervention of the central bank for influencing liquidity in the economy. See, money markets are very liquid markets. So with the help of the money market, I can make a liquid investment, right? If I want to make a liquid investment, I think that I have 50,000 rupees and I will require these 50,000 rupees after 2-3 years. So I have to make a short-term investment and also a liquid investment because after 3 years I need the money, so it should be liquid. I should be able to sell that instrument and get the money immediately, right? So to make a liquid and a short-term investment, money markets are very helpful. Provides access to the user for short-term money to meet their requirements at reasonable price. Characteristics of money market. Indian money market has major features. Short-term funds are borrowed and lent, right? Money market are short-term market. So, in this market, short-term funds will be borrowed by people and given back. No fixed place for conduct of operations. Transactions can be conducted over the phone. See, in the capital markets, we have a stock market or other places like where the transaction will be executed through that particular exchange, right? But in money market, there is no particular place where the transaction will take place. It can be executed on a call or at any other place. There is no specific place for it. Dealing may be conducted with or without the help of brokers. You know, in capital markets or stock exchange, the dealing takes place with the help of broker, right? You have Grow, you have Zerodha, you have other brokers available in the market. You purchase a stock or security instrument with the help of that broker, right? Yes, Shala? In a stock market, you purchase a security or a stock with the help of a broker. You yourself cannot go and purchase it, right? You have to have an account with Grow or Zerodha, which is the broker through which you will purchase the stock, right?
Yes, ma'am.
So in a capital market, broker is required to purchase that stock or security. But in money market, it can take place even if there is no broker, right?
Yes, ma'am.
The short-term financial assets that are dealt in are close substitutes of money. Since it is a liquid market, they are saying that they are close substitutes of money. Money is a liquid asset, right? So in short-term market, we saw the duration is short and the instruments are liquid. like government securities, treasury bills, commercial bills. These are very liquid instruments. Liquid means what? If I purchase this and I need money, if I go and sell it in the market, anyone will purchase it and immediately give me the money. So that is said to be liquid. So since they are liquid, they are substitutes of money. Money is also liquid, right? Money is very liquid asset, right? So they are saying they are substitutes of money. Funds are loaned for a maximum period of 1 year. So the duration in the short term or money market is what? Maximum 1 year duration. We are lending money for a maximum period of 1 year in money market or short term market. Like sometimes the bank needs money for 1 day also. They go and approach another bank and say that I want money for 1 day. So in the morning they take the amount and at the end of the day they pay out the loan. So that are these are money market. So here it is 1 year. It can be different duration. Maximum it is 1 year for money market. Presence of large number of sub-markets. In a money market, there are large number of sub-markets. Like there is not only one market. Many segments of market are there, small, through which people operate, or not through only one market. Clear? Now we will see structure and functions of Indian money market. Structure and functions of Indian money market. Functions of money market. It links the lenders and borrowers for short-term funds. It is purely a market for short-term funds and financial assets. See, it is a market through which it is bringing together a lender and a borrower through which they can get short-term funds. Lender will provide short-term funds and the borrower will get short-term funds. So it is a link for lenders and borrowers to provide them short-term funds. It provides working capital requirements for industry, trade and agriculture. Do you know what is working capital? Kunal, Sheila? What is working capital? The capital that is required for the day-to-day operations of the to run the business, required for the day-to-day operations of the business. So working capital is what? Current assets minus current liabilities. So what means day-to-day operations? See, suppose if I purchase a raw material to produce a product or output that I will be selling and I produce it, but I don't sell that output in the market, it is in my warehouse. But the creditor from whom I purchase the raw material comes and says to me, I want my money for the goods that you have purchased from me, raw material you have purchased. So that is my working capital which is required for the operation of my business. If I want to pay the rent of the land which I am using to produce my output, that is required for the day-to-day operations of my business, right? Every day that is required. So that rent will be my working capital requirement. So the funds which are required for the day-to-day operations of the business are short-term funds. So that funds, the money market helps the business to get those funds of both the industry as well as the agriculture and trade. It provides financial assets with high degree of liquidity, call money, treasury bills, commercial bills. What we discussed, money market is a market where the borrowers help lenders provide, borrowers and lenders, borrowers get short-term money requirements through which short-term financial instruments, like they invest in short-term financial instruments like what? Government securities, commercial bills, treasury bills. And these instruments are very liquid. We saw, right, Sheila? So money market help people to invest money in instruments which are very liquid. It helps trade and commerce by developing a bill market and acceptance market. See, bills of exchange is also a money market instrument. because it is very liquid. If I purchase goods from a person and I will be the buyer, he is the seller. The seller say on credit, the seller says what? Give me a bill of exchange stating that you will pay that amount within 3 months. So I give him a bill of exchange. So the seller, if I don't, he will not wait for me for 3 months to get the money from me. So what he will do? He will go to the bank and discount it with the bank. So bank, after deducting the commission, will give the money to the seller, right? So it is very liquid. He can directly go to the bank and discount it and get the amount cash after the commission of the bank. So it is helping to develop the bill market. It enables the government to raise short-term loans with treasury bill market. Like everyone, it is helping to get short-term funds or get short-term credit. Money market is very useful for this purpose. It is controlled and regulated by RBI. The money market is controlled and regulated by the Reserve Bank of India. It makes the monetary policy effective. It will helping in the development of the monetary policy. What is the monetary policy? Like during recession and inflation, we saw the Reserve Bank of India comes into picture. It changes the cash reserve ratio. It changes, it enters as an open market operations. It uses moral suasion to alter the monetary policy, right? Amount of money supply in the economy, right, Sheila?
Yes, ma'am.
It provides opportunities for lending the surplus funds of individuals, banks and other institutions. It helps the central bank in maintaining stability of the value of currency unit. The money market is helping to stabilize the value of the currency or rupee. Next, see. So there are different structures in money market. This is the organized structure and this is the unorganized structure. So money market is divided into two structures. First one is the organized structure and the second one is the unorganized sector. In the organized sector, we have Reserve Bank of India, commercial banks, saving bank, non-banking companies and cooperative banks. Under commercial banks, we have scheduled commercial banks and non-scheduled commercial banks. Under scheduled banks, we have public sector banks and Indian banks. Again, under public sector banks, we have state bank and nationalized banks. We will complete this page now. Organized sector. It is called organized sector. Why? What is the difference between the organized sector and unorganized sector? See, organized sector will follow the directions and instructions of the Reserve Bank of India, while the unorganized sector is not concerned with the directions or measures or directions of the Reserve Bank of India. Unorganized sector will not follow the directions of Reserve Bank of India. So, difference here is organized sector and unorganized sector is simple. Organized sector has to follow the directions of Reserve Bank of India, and unorganized sector does not follow the directions of Reserve Bank of India. It is called organized sector because the activities are systematically coordinated by Reserve Bank. The players in the organized sector are the organized sector of Indian money market comprises of the Reserve Bank of India, the State Bank of India, the Indian joint stock companies, the exchange banks which are mainly finance, Indian foreign trade, cooperative bank, other special institutions such as Industrial Development Bank of India, State Finance Corporation, National Bank of Agriculture and Rural Development, Export-Import Bank, which operate in the money market indirectly through other banks. Then we have non-banking financial institutions like LIC, General Insurance Corporation, Unit Trust, which operate in this market only indirectly through banks and not directly. Quasi-government bodies and large companies also market their short-term surplus funds available in the organized market through banks. Like see, companies will also require short-term funds, like large companies also require to meet their working capital requirements, they require short-term funds. So they also approach bank for this short-term funds. Cooperative credit institutions occupy the intermediary position between organized and unorganized parts of the Indian money market. These institutions have three-tier structure. At the top there are state cooperative banks. At the local level there are primary credit societies and urban cooperative banks. Considering the size, methods of operations and dealings with RBI, commercial banks, only state and central cooperative banks should be included in the organized sector. The cooperative banks at local level are loosely linked with it. We will just see the unorganized sector and then we will complete it. Then I'll leave. Just 5 minutes now. What we saw, what was the unorganized sector, which does not follow the directions of Reserve Bank of India, right, Kunal? So which organizations can be there in an unorganized sector? So unorganized sector will include indigenous banks and money lenders. So if there is a saukar or a money lender in a village, will he follow the directions of the Reserve Bank of India or anything, he is controlled by anyone?
No, ma'am.
No. So that credit through a indigenous bank or a money lender is not controlled by the Reserve Bank of India. So that is an unorganized sector. So in this, indigenous banks and money lenders come into picture. We will see what. The unorganized sector consists of indigenous banks and money lenders. It is unorganized because the activities of its part are not systematically coordinated by Reserve Bank of India. I told you, right? So organized, the activities will be coordinated by the Reserve Bank of India. Unorganized, the activities will not be coordinated by the Reserve Bank of India for indigenous banks and money lenders. The money lenders operate throughout the country, but without any linkage among themselves. Indigenous banks are somewhat better organized because they enjoy rediscounting facilities from commercial banks, which don't have the link with RBI. But this type of organization represents only loose link with the RBI, not much link. Loose link is there for indigenous banks. Constituents of money market. There will be a lender, there will be a borrower, right? Money market is a center where short-term funds are supplied and demanded. Thus, the main constituents of money market are the lenders who supply and the borrowers who demand the short-term credit. Every time you recall money market, you should recall that it is a market where we get short-term credit. Supply of funds. There are two main sources for supply of short-term funds in the Indian money market. Unorganized indigenous banks or sector and organized modern sector. Demand for funds. Who will be demanding these funds? In the Indian money market, the main borrowers for short-term funds are the central government, the state government, local bodies, municipalities, traders, industrialists, farmers, exporters, and general public. Okay, next lecture we'll see sub-markets of organized money market. Next lecture we'll complete this. Okay? Okay.
Yes, ma'am.
Okay, bye.